Hello, dear students of MCOM SEM 3. I am Dr.D.K.Mitra from P.G. Department of Commerce, Kolan University, Chaivasa. Uh, the subject of discussion today is your security analysis and portfolio management, and I have selected a very important topic for you, that is investment avenues in portfolio management. The topic of discussion today is investment avenues and portfolio management. Now, dear students, let us first of all understand what is this investment avenue. Okay, we can call it avenues, we can call it alternatives, we can call it schemes. So it is investment avenues, investment alternatives, investment schemes. Now what this investment avenue means, okay, the investment avenue are the different ways that a person or the business organization can invest his or its money. So it's a different ways of investing your money, whether it is a business organization or an individual. There are different ways, there are different alternatives of investment where the investor can invest. Now, as you know, dear students, that in the present financial world, there are different investment avenues. We can say there is a plethora of investment avenues or alternatives, and the investor can board the right investment vehicle from the available opportunities. Whatever opportunities are available, from then there only you have to board the right investment vehicle so that you can have a regular income for you or for your business. Now, when we say that there are plethora of investments in this financial world, in the present financial world, there are some important, some major investment avenues which I wish to discuss, dear students, today. Those avenues may be share market, maybe debentures or bonds, maybe life insurance, maybe say money market instruments, maybe mutual funds, maybe real estate, maybe precious objectives like gold, silver, diamond, whatever. There may be derivatives, there are non-marketable securities, etc. So there are several investment avenues, dear students. Now, before we land on to the different or land on to discuss the different avenues of investments, there are certain important considerations, dear students, which I want to first of all tell you, and thereafter we will see each and every investment avenues which I have just told you. The among the important considerations, dear students, let us take the first important consideration which I wish to tell you. The investment in any of the alternatives depends on the needs and requirements of the investor. Investment in any alternatives depends on the needs and requirements of the investors. Now, the corporate world and individuals, they have different needs and requirements. So before investing these alternatives of investments, these schemes of investments, these avenues of investments need to be analyzed. They need to be analyzed in terms of what? In terms of risk, in terms of returns, the terms or the period, convenience, safety, liquidity, tax saving, marketability, etc. So the before investing, the alternatives of investments must be analyzed in terms of these things. That is your risk, the return, the safety, the tax saving, the marketability, the liquidity, the convenience, the terms or the period. So these are the important terms of analysis on the basis of which the investment avenues will be analyzed. Another important consideration, dear students, which I definitely would like to tell you, that is the investor has to align the objectives with the investment avenues. What is your organization objectives? What is the need and requirement of your business? So you should align the objectives with the investment avenues. This is very, very important. You have to align the objectives with the investment avenues. Another the important consideration, dear student, this is also very, very important. You must listen to this very carefully. In the recent past, you know, a wide range of better regulated investment options have evolved in the financial world. This you know, dear student. In the recent past, there is a wide range of investment alternatives. Better regulated investment, I would like to say. These options are there, and they have to be analyzed properly. Now, simultaneously, I would like to say these options have brought more complexities. As the alternatives go on increasing, the complexities arise. So options have brought more complexities in terms of what? Complexities in terms of what, dear students? In terms of risks, returns, and the objectives. As such, the present day investor is more confused than ever. They are more confused than ever. On the other hand, the investors today are far more educated and financially literate also. Hence, financial planning and wealth management solutions have gained tremendous importance. And wealth management solutions also have gained tremendous importance, and investors need to achieve the wide opportunities. Compare and contrast, and then finally take investment decisions. So, dear students, the financial planning and wealth management solutions these days have gained tremendous importance, and investors need to analyze a wide range of opportunities. They should compare and contrast and then finally take the investment decision. This is so these are the three, I'd like to say, three important important considerations. Now let us land on to let us discuss each and every investment avenues, so that you can have a proper idea regarding these alternatives. But although I said that there are plethora of investment avenues, but I have taken some major alternatives, major avenues where the investor can invest. The analysis the investor has to do in terms of risk, return, safety, security, lot of things are there. The terms of period, the tax savings, there are several on the basis of which the investment avenues must be analyzed. Now let us come to the first avenue that I would like to say, very, very important, that is equity shares. Now all of you know what is equity share. What does it represent? You know, dear students, these shares represent ownership. Ownership in a running company. What does this ownership mean? By ownership, we mean share in profits and assets of a company. Share in profits and assets of a company. This is what we mean by the ownership. But generally, there are no fixed returns on these equity shares, that you know very well. Therefore, it is considered as a risky investment, isn't it? But of course, depending upon the situation, it is liquid investment. Due to what? It is a liquid investment due to what? Due to the presence of stock markets. There are some equity shares which are regularly traded in a stock exchange, and therefore the liquidity problem is not there. There is a high liquidity. Otherwise, for stocks having less movements, the stocks, I mean the shares which have less investments, less movements, the liquidity is highly is not highly attractive. The equity shares which does not enjoy the proper movement, regular movement, the liquidity is not highly attractive. So this is what we understand by the equity shares, the first and foremost important investment avenues. The second, dear student, we can take, say, debentures and bonds. They are these debentures and bonds, they are long-term investment options. Long-term investment options with a fixed return of cash flows. They are relatively risky, of course. They are relatively risky, but the cash flow is there is a cash flow is comes in a fixed term. That is, there is a fixed stream of the cash flows. They are relatively risky, of course. The amount of risk involved is dependent, of course, who the issuer is. For example, suppose it is a government bonds or debentures. If the issuer is the government, the risk is assumed to be almost zero because it is a government security. The risk is almost zero, assumed to be zero. It is nil. However, investment in long-term debt or bonds, long-term debentures or bonds, there are risks in terms of interest rate risk and price risk as well. So the stocks, there are risks in terms of interest rate risk or price risk in other types of debentures, in long-term debentures or bonds other than the government bonds. So this is regarding the debentures and bonds, where see, debentures and bonds are long-term investment options with a fixed stream of cash flows. They are relatively risky, of course, but the amount of risk involved is dependent on the on who the issuer is. The third avenue, or the investment avenue, I want to select, that is mutual funds. These mutual funds, which is very well known to you, you understand what is mutual fund, the fund which is mutual, they are easy. They are easy and tension-free way of investment. So they are easy and tension-free way of investment, and it automatically diversifies. This is very important. It automatically diversifies the investments. A mutual fund is an investment maybe only in debt, maybe only in equity shares, maybe a mix of debts and equity. The mutual funds are having several benefits, several advantages as well. Say, number one, we can say that there is a professional approach in these mutual funds. This is very, very important, the professional approach. Number second, we can say there is a benefits of a scale as well. There is a benefit of convenience. We can get professional services at a very lower cost. In case of open-ended mutual fund, there is assurance to investors for secondary market support also. For open-ended mutual fund, there is a assurance to the investors for secondary market support also. There may be there is absolute transparency about investment performance to the investors. Absolute transparency about what? About investment performance, how your investment is doing, how your investment is performing. It is absolutely transparent to the investors. Another major investment avenue, I can say it, money market operations. Money market instruments. You know, dear students, money market operations, you understand that they are just like debentures, but the time period is very less. Generally, it is less than 1 year. Corporate entities can utilize their working capital in money market instruments. Some of the money market instruments are, say, treasury bills, What else? Treasury bills, say corporate commercial paper, certificate of deposits. There are several money market instruments. So they are just like debentures, they are just like debentures, but they are, and the time period is very less. Generally, it is less than 1 year. And generally, the corporate world, the corporate entities, they corporate entities, they can utilize their working capital in these avenues. Another important investment avenue, dear students, I would like to discuss, that is real estate. This term you are well aware, the real estate. Every investor, as every investor, as part of their portfolio, invested in real estate. They do invest in real estate. What this real estate is? Almost every individual or corporate investor invests in residential or office buildings. And not only residential and office buildings, there are other options as well. There may be, they can invest in agricultural land, they can invest in semi-urban land, they can invest in commercial property, they can invest in farmhouse. There are several options as far as the real estate is concerned. And this investment in real estate, there is a tremendous growth in this investment in this sector. And finally, of course, there are several types of investment avenues, but I would like to close with some other investment options, investment alternatives. There may be some precious objects also, say diamond, gold, silver, art objects also, like paintings, etc. There may be coins also, and so there are several precious objectives also, and this is also may work as an investment avenues. There may be, you can invest in life insurance corporation, where your life is safe if you insure your life. And when your policy matures or the person expires, the life insurance cover is there. There is investment. There may be investment in general insurance also. Then another important, there may be derivatives also. Now, what these derivatives mean? They mean indirect investment. Indirect investment in what? Indirect investment in indirect investment in the assets. Derivative market is growing at a tremendous speed. Derivative market is growing at a tremendous speed. Why? There are several advantages if you invest in derivatives. Like, there may be leverages with the investment. You can leverage the investment. There is also an advantage that it manages the risk and helps in doing speculation as well. So you can leverage the investment, you can manage the risks, and it helps in doing speculation as well. And finally, among the others, there may be you can invest in non-marketable securities also. What is this non-marketable security? Do you know what is non-marketable securities? Non-marketable securities are those securities which cannot be liquidated in financial markets. Non-marketable, that's why it is non-marketable. Non-marketable securities are those securities which cannot be liquidated. You cannot liquidate your such investment in financial markets. There are several there's non-marketable securities. These securities may include, say, bank deposits. You cannot liquidate this in financial market. That's why it is non-marketable security. The bank deposits. Then there may be post office deposits. There may be company deposits, provident fund deposits. There are several types of non-marketable securities where you can invest your money. So this is another important investment avenue. That's all, dear students. This topic is a very important topic for you. I hope you must have been benefited by this lecture which I had selected for you for your being it is an important chapter. And thank you very much, dear students. uh, um, uh, uh, Finally, I would like to say that um, because the environment is not very good. There is an outbreak of this very dangerous virus. So all of you, keep yourself safe. Stay home. Stay safe. Thank you, dear students. Wish you all the best. Thank you, dear students.